this is one of the feature which was missing in Dynamics for a long time, and thankfully Microsoft added it last year. There was acquisition of IP from another partner, Armanino, and great addition, something that a lot of customers needed. So we're going to go through this topic, and let me. So I'm going to be co-presenting with Satish, who just did great presentation on new features with Sukrut. So, and myself, Yogesh Kasat, I'm with Real Dynamics, and here is my contact information. Okay. So for our session, this session, the learning objectives are really to understand revenue recognition, look at what are the setups required, how to enable the revenue recognition functionality, how to defer the revenue, and then recognize the deferred revenue. And we'll talk about what are the key touch points with other modules, integrations with other modules for revenue recognition, and then what are some of the key features. We'll get into few bundles and scenarios, but this topic is so vast. I'll just upfront. It's hard to cover this in 1 hour. So we'll do our best. Goal is to give the basic insights about how this works and why this feature even exists. Okay. So let's understand what is revenue recognition, what is deferred revenue. There are a lot of non-finance folks, a lot of techie folks on the line. So I'll start with some of that process. Let's say I'm going to Microsoft.com. I just pulled this image. I'm buying 12-month subscription for Office, Microsoft 365 now they call. So the price is $70 per year. Even though I buy it today, Microsoft can't report this as a revenue in this month, like month of May, when they report their financials. As this service or subscription is for 12 months, what they do is they defer that revenue over 12 months, and then they recognize that revenue over 12 months. So for simplicity, if this was $120, they will be only recognizing at high level $10 right now for this month, and then rest of the $110 will be recognized for rest of the over period of next 1 year, $10 each every month. Okay. Of course, this is very simple example in that perspective. Then number of days play role, like in this month I want to recognize based on number of days. Say today is pretty much almost end of the month, so I may have to recognize only for that period that many number of days revenue, and then prorate it and recognize it in the last period similar way. So those are few of the things just from concept perspective what revenue recognition and deferral means. So when you push that revenue into future periods, that's deferring the revenue. When you in those future periods, when you report that as a revenue, is recognizing the revenue. Now let's talk about a bundle scenario. This is again a very simple scenario in the bundle. So I'm buying a Surface and Microsoft 365 from Microsoft. So this bundle is sold, let's say at $540. Now, as a customer, I'm buying a product, which is a bundle for this amount. While internally, Microsoft has to allocate revenue for each product. Hardware will recognize immediately because there's performance. It has to be kind of tied to the performance. So meaning delivery of the product. So as laptop is being shipped, Surface is being shipped and delivered, they will recognize the hardware revenue. But the subscription revenue will have to be deferred and recognized over a period of that subscription, which is 1 year. Now, internally, they have to come up with certain rules to allocate the revenue. Now, how much of this portion goes to Surface versus how much of this goes to the 365, Office 365. So those are things, and then you would hear ASC 605, ASC 606, and those are some of the guidelines from uh, perspective of like how this recognition should happen, and every enterprise has to have their own policies defined on how they defer revenue, recognize revenue. There are a lot of other things like VSO and some other technical terms in terms of like how do you deal with certain discounts and fair pricing for the components. So now we'll leave those technical jargons behind, ASC 606 and VSO and all that. Let's go through now simplicity in the just basic process. So you have a contract that needs a rev rec. So you have a project which has a sales order. Now performance obligation, you're trying to understand the bundles. Then you're trying to define the deal price, which is a transaction price, and then you're kind of allocating the revenue, allocating the price, and then final step when you invoice that revenue. In the example I mentioned earlier, I'm buying a bundle from Microsoft, so the payment is already made. So Microsoft received the money for whole $540, but they can't claim all 540 as revenue right now. It will just hang in as a liability on the books, and then will be, which is a deferred revenue, and it will be recognized over a period of time. So same thing here. At this point, there will be deferred subledger, which will get posted to defer that revenue and then recognize it over a period of time when you invoice the order. Now let's get into dynamics portion. So considering number of different setups and things, I'm not going to go into dynamics. It will make things little bit time consuming considering the time we have. So we have put together the slides. We'll just go through the slides and show you some of those things. So to enable this revenue recognition functionality, you have to, of course, as part of license configuration, enable this because it's only applicable for certain businesses. It's not applicable if you're in kind of distribution where you pick, pack, ship the product and you just recognize the revenue the minute you ship the product. But it's more for those kind of construction industry or projects, fixed price projects, or also subscription based. That's when you really need this functionality, and that's when you'll enable it. Then when you enable it, the revenue recognition module comes up. You'll see it under the modules, and then you'll see the all different features under this module. Then the first thing is revenue schedule. So this is the one which we need to define. What are different revenue schedules you have? Like the common one are like, so 12-month, the one example we looked at, 1-year subscription, and you want that, and then based on those, and then how many times you want to do it, how often you want to recognize, like on first day of month and last day of month and things like that. All of that can be defined in the revenue schedule. So if you have a contract for 3 years, you may have to do it for 3 years, or if you have a contract for like 6 months, kind of. So those different recognition schedules have to be defined. Okay. And as we looked at the previous, so when we say 12 months, in this scenario, I have 12 months going equally, and then last month I'm doing the rounding to match the revenue. So those different things you can define on the revenue schedule. So certain contract, there are scenarios when you have more performance obligation. It kind of, in a nutshell, from accounting principle perspective, you're trying to align your revenue based on the cost when it is going to be assigned. So you're trying to bring the revenue and cost in the same period. So you're defining the periods and then percentages. The journals, of course, this is going to get posted into general ledger, so you need to define the RevRec journal to post. There are a few parameters under a general ledger module to define those journal names, and then some other areas like discounts and what needs to be recognized, considered for RevRec. So it's this is on the general ledger parameter screen. Okay. Our favorite posting profiles. So as part of posting profiles on the products, you are defining the deferred revenue, COGS, and things which GL accounts to use behind the scene when there is a deferred revenue happening on the invoice posting. Then on the release product, you have to define, as part of the product setup, you have to define what the revenue schedule is for that by default, and then how the price allocation, revenue type, and different parameters that are going align with that product needs to be defined. So Office 365, the one we're looking at earlier, will show this say schedule of 12 month and recognize the revenue. I'm hearing some music in the background. I don't know if somebody needs to mute the line. Somebody named FC, they need to mute their line, please. Okay. Let's go to the next one. Of course, this functionality comes with its own new security role, new role that allows you to get the access. There are multiple duties that are tied to the RevRec functionality, and you can use those as needed. And it also impacts some of the other duties, for example, maintain sales order and stuff like that for this role. So once you have the RevRec manager role, this is how your revenue recognition, you'll have full access to this functionality, and this is what you'll see. Let's look at the postings. So now we are going to look at the posting as if you recognize the revenue immediately. So this is the posting prior to having the RevRec enabled. So you're recognizing the whole revenue upfront in this scenario. So you have a COGS, and then you have a sales, and then you're recognizing the whole sales on this date. With RevRec, what you're doing is you're pushing it to deferred revenue. As you see, the number on this account is 25 as compared to the previous one, the sales was 4. So that also tells you that you're posting it to the liability section on the balance sheet, that you're pushing it as a balance sheet item than P&L item. Okay, the revenue. And then when you recognize the revenue, that's when you pull it from balance sheet and push it on the P&L. Okay. Of course, our sales taxes are not really factored right now in RevRec. So as I mentioned earlier, this functionality, RevRec functionality, didn't exist in Dynamics 2 years back, and recently, last year, they added it to Dynamics. It's a great step forward, but of course there is plenty of opportunity to improve it. And as you may have heard, ASC 606 and some of these new things are coming from laws perspective. They are fairly new, so rest of the world, like all the applications, are also doing the catch up always to meet the requirements and add functionality. Okay. Then there is an inquiry. So now I want to look at that posting and I want to see how it is going to be recognized. So I can see over period of next 1 year, this revenue is going to be recognized, and how what's the frequency it's going to be recognized, and how much amount each period. It's kind of very similar to the flip side on those who are familiar with fixed assets module. You see the depreciation in similar way. What's my depreciation schedule looking like? And similarly here, you see the what's my RevRec schedule looking like. Okay. So with that, so these are like more setups and also inquiries that are available out of the box. I'll turn this over to Satish and let him take us through rest of the slides. Satish.
Satish. Let me know when you can hear me okay, and also see my screen.
Yeah, I can see it. Thanks.
Thank you. So next, we are going to look at scenarios, and as Yogesh mentioned, given the content we have, we are not using the system. We are, we have good screenshots, and we'll just walk you through with the help of presentation. So the scenario that we have is how do you go about, deferred revenue processing in the system? So Yogesh mentioned a certain example. You kind of defer it first and then you recognize it. How exactly you do that in Dynamics? So it all starts with, once your basics are set up, and your basics are basically your item. If that's set up and your parameters are set up, you are ready to begin. So the very first step that we have in the entire process is create a sales order. So on this specific slide, you will see that we have created a sales order. We have added the product, and then we have also specified what the unit price is. The new field that has been added is revenue schedule, the setup for which Yogesh covered earlier. But in this scenario, you can see that we are using 12M, and that basically is 12 months distributed equally over the entire duration. Other fields that have been added to support this is, so it's 12 months, but 12 months for when? Is it this month, next month, whatever the duration is. So new fields have been added on the setup tab at a line details level. And those fields are start date, so when your obligations are starting, and when does it end. So if you look at it, this is 12 months. And the occurrence is also coming in as 12. So once this is done, this is the basis for setting up our deferred revenue processing. Once we, there is nothing that's getting posted at the time of order creation. Everything happens. So from a GL perspective, everything happens at the time of invoicing the sales order. But system does give us flexibility and functionality so that we can look at what system is going to do when you were to go invoicing this order. So the first step in order creation is the order, for revenue, for you to see what exactly is going on with revenue schedule, the order needs to be confirmed. So in this specific slide, you can see, the order operation has been completed, and that means we have completed the order confirmation. The lines exactly looks the same, so there are no changes as far as order is concerned. But on the header under Manage tab, there are a couple of options, and this section revenue recognition has been added. So here you can see, revenue price allocation, reallocate prices, update revenue, and expected revenue recognition schedule. So that kind of lights up only when the order is confirmed. The next one is the expected schedule. So on the previous, on this revenue recognition menu, if we click on expected revenue recognition schedule, it would show us the actual posting that may happen. So in this case, we confirm the order on a specific date. So we confirm the order on January 8th, Feb 8th, and here are the recognized dates. And these recognized dates, if you remember, are the one that we have defined at a line level. Automatically picks up the period names, what the revenue main account is, the revenue schedule. So there is a lot of information that's available on this page. And the reason why it has been provided is, if you don't need something, you can always personalize it and hide it. But it kind of creates issue if the information is not there. This column is very important, which is total recognizable revenue. So what has happened is, we had the total amount of 150, and we have divided it into 12 months. So 150 divided by 12 is 12.5, and now that has been given across the entire months. This is still expected, which means the order can be edited. Once the order is edited, either for the quantities, prices, or dates, or even the revenue schedule, for we to look at the new expected schedule updates, the order confirmation step is mandatory. Here you will see, it says update revenue price allocation. It only changes data on revenue price allocation, and not on the expected revenue recognition schedule. So if you are using or plan on using revenue recognition and want to make sure that expected revenue recognition users are able to look at it, just as part of your SOPs, just make sure that the orders are confirmed if there are any changes to the order. So we have the expected schedule, and now we are done with the expected schedule, and now we want to take to a next step, and that next step is we invoice the order, which means we are now raising a bill so that we can get paid. So in this case, it's more or less a similar data, but now what happens is the expected revenue recognition that we were looking at earlier, that button get disabled, and a new button called revenue recognition schedule that gets enabled. The information more or less is same, and here you can see the amounts are still same. The difference is now we have invoice that we have posted. So in this case, customer invoice 745 has been posted, and now data is sitting in our GL accounts. So we have deferred the entire revenue, and later on, say for example, at the end of March, now we want to start recognizing this revenue. So how do we go about doing that? So the option we have, there's a menu item that has been provided. So there are two options that we can do. One is if you know a specific sales order that has been invoiced, you can just do, or you can just go and recognize revenue from there. But in most of the scenarios, you may not know, given the system will have hundreds and thousands of contracts, we also have a functionality wherein you can just go to periodic area and run this recognize revenue functionality, you specify the revenue schedule date. So in this case, we are saying, the month of March has just completed, and we want to recognize revenue until end of March. So we just specify the date in this specific section. This doesn't have to be a month-end activity. It can be a periodic activity, and it can be as easy as, or it can be as soon as on a daily basis, if that's what your business does, and depending upon how your performance obligations are set up. So earlier, when we looked at revenue schedule, we looked at 12 months, but it may be, if there is something that you want to recognize on a daily basis, you just need to make sure that your schedule is set up for that, and then you can start recognizing the revenue. So once that process is run, what it does is, it creates the revenue recognition journal. So earlier, Yogesh mentioned about, the need for journals and where that's set up. Now we are looking into, how that journal is getting used. So what it did was, depending upon the setting that we have specified for my recognizing the revenue, the date is getting taken care of. And here now you can see the accounts. So this is my deferred revenue account, and this is my revenue account. So the first one is liability, the second one is on the profit and loss side. And now what we are doing is we are just recognizing the revenue. This is what my my revenue is. So here, the COGS, again, deferred COGS to COGS, and deferred revenue to revenue account. Now, this exercise will be done on monthly basis in this specific case, and over the our next 12 months, we will have the entire revenue recognized. So this is my revenue recognition schedule. So if you just notice, we posted the invoice, which means we deferred the invoices for 12 months, and then we recognize the revenue for a single month. That information is retained and maintained really well on the in the system. And here you can see, when I'm looking at the revenue schedule for a specific sales order, now it can tell me that we have already completed it partially. There are other rows that are hidden on this form, but you can see, first of all, the process gets marked, and then you can also see there is a voucher. If it was only if there were no COGS, it was only more from a revenue perspective, then you will see the actual voucher. But if there are multiple vouchers that are getting posted, then you will see asterisk in there. But if you want to know what are the what exactly the vouchers are, you can click on voucher details, and it would provide you the details. So here are the vouchers in that case that have been posted by the system. The beauty of this is, you remember that we posted these RR vouchers from the revenue recognition journal. So you posted it in the journals, and that information is then automatically linked back with the revenue recognition schedule. Now, there may be scenarios wherein you started with something. You started with a specific schedule, 12 months, and then later you realize, oh, either it was a user error, or the contract needs to be, or the contract should have been for 6 months. The user was just given the wrong information. Typically, what happens is, you go kind of do the complete reversal and rebook. But the functionality that Microsoft provided as part of revenue recognition module is, you don't have to go back and change your sales orders at all. What you can do is, you can just update your contract terms. So if it's for 6 months, you can just do the changes on the revenue schedule. So there's a functionality update contract terms that we can use. Here we can specify when we want our revenue to start, put in what the schedule is. So in this case, instead of 12 months, we are saying it needs to be 6 months. We look at what the end date is, and once it's done, we click OK. Now, once that's done, system does a lot of things behind the scenes. Now, in the example that we have been covering so far, we already recognize the revenue for the month of March, and now that needs to be taken into consideration, because now we are saying the entire contract is for 6 months. So what system does automatically is it will reverse what we have already processed. So in this case, you can see a new line is getting added, 431, and it's minus 1250, and it's an exact reversal of whatever we have recognized earlier. And here, this reallocation reversal. So that's what it kind of tells us. It's a reversal along with the negative signs that you see at different places on the screen. In addition, what it did was it kind of considered the entire order to be a fresh order. And if you remember, earlier we were dividing $150 by 12. Now, given that it's 6 months, so it will automatically create, for 6 months, 6 lines for the beginning of the month, and it will specify the respective amount. So in this case, $25 per month. And once this is done, then it's a similar scenario. So at the month end, or if the month has already passed, you go about recognizing the revenue. So in that case, whatever steps we did earlier to recognize the revenue, they all apply exactly same on the new revenue recognition schedule. So next, what we have is a specific scenario. How does the credit note process works? And what if there is a midterm contract cancellation? How do you go about, fixing what you have already posted or already deferred? How do you go about pull it back? So in this case, what we have here is we have created a credit note, and in this case, it's the exact same amount, and we have the occurrence for 6 months for the reversal. So it's a complete credit. Once we invoice it, then what will happen is, earlier this is what we saw. So these are the invoices, that have originally been posted. You can see the entire history here. So we have 12 months, so that got automatically reversed out. Then we have 6 months. We haven't recognized anything. And now, given that we have created a credit note and reversed it out, now there are 6 lines based on the revenue schedule that have been created, and these have been created with the help of credit note. And you can see the amounts getting deferred appropriately as well. From here on, the reason Microsoft had to go this way is, once anything is posted in GL, we just can't delete it. So in order to balance out the act, we are posting the reversal of those transactions. So this is still in the system. And then you have to look at this specific sales order and recognize the revenue for the entire order. And what would happen is it will post debits and credits, and the net impact on the months would be 0, and your sales orders would have already been closed the moment you did a credit note on a sales order. So now, the scenarios that we were talking about. So one was complete cancellation, and then there are others, midterm contract cancellation, wherein you have already fulfilled your liability for a specific month or months, and now either because of reason XYZ, the contract needs to be canceled. So there are few things that we need to make sure are correct to avoid any kind of issues. Is number one, figure out what exactly needs to be credited to the customer. That's one. So in this case, we already completed the obligation for 1 month, and now we want to do a reversal of 11 months. So from a setup perspective, all the revenue schedules, in this case, we are using 11 months. But if you have these cancellations going on, all the revenue schedule needs to be created first. So if the contract might get canceled after 10 months, after 9, 8, it can be any number. So just make sure from a revenue schedule perspective, you have all those all the setups defined and appropriate percentages laid out. Otherwise, the system is not going to work. The next is also make sure that your dates are correct. So when your contract cancellation is starting, so it's starting on 4/1, and then it's ending on 2/28, and you can also see the occurrence is 11, which means now we are going to do reversal for 11 months only. So next, now we are looking at credit note postings. And here you can see, from a customer perspective, we are refunding this much amount. In this specific case, we had, the amounts may not perfectly align with, $150 because we had certain charges that we applied on top. But from a system perspective, if you don't have the charges, your amount should be exactly same based on whatever you have defined while creating the credit note. From a revenue schedule perspective, it's more or less the same as we looked at the entire order cancellation. The only difference is, if it's a complete cancellation, you will see 150 on the positive side and 150 on the negative side. But in this case, given that we are reversing only 11 months, so you will see the amount that we specified on the line. So in that case, that's $137.50, and it's appropriately getting allocated across all the months. So the next one is the revenue price. So there is a functionality that has been added. So on the release products, now there is a revenue price that we have in place. So we go to the release products, and now there is a new tab wherein we can define the revenue price for a given product. It kind of helps when we are when the price that we are selling it for customer is different than the fair market value price. So whenever we are doing the sales orders, or whenever we are doing the revenue recognition and using the allocation, we need to allocate revenue on the basis of fair market value. So considering that, this revenue price feature has been added. So next, the scenario. So how does the revenue price allocation actually works? So we'll go through sales order creation. We'll look at allocation. We'll process invoices. We will create a new contract, and then we'll see how the reallocation kind of works, and then also look at postings as well. So a very simple scenario again, in this case, just to make sure, we are doing revenue allocation. So we need to have more than one uh, uh, item or a product or services that we are doing. So we can look at how the allocation is working. So I have two services that I'm providing here. One is the installation service that will provide. So this is 1O. So it's one-time occurrence that we will do, and for that we are charged $400. And then we are also providing services, and that's for 12 months at a price of $600. When we do the revenue price allocation, so what happens is, we just confirm the order, and when the order is confirmed, it will automatically do the revenue price allocation. So here on this screen, what you see here is, we have the prices, so a lot of information here, and then we have also specified the fair market value of these products. So that's what this allocation price is. So this is $50, and for my managed services, that's $250. What system does is system automatically calculated the percentages, and there is a formula that system uses, and it will find out the percentages uh, of the allocation price, and on the basis of that, it will allocate the net list price into your allocation amounts. So this is the fair market value. So once we invoice this specific order, we will see that the revenue needs to be recognized for the installation is $116, and for my services it's $583. Uh, if you look at expected revenue recognition schedule, so it will also reflect the allocated prices as well. So here you can see for my installation, the price is 160. Given that we have set it up as a one-time occurrence, so you only see one rows. Whereas for my managed services, given that it was 12 months, now you can see the price of 583 is allocated across 12 months, and that comes to $48.61. Now, once we invoice it, this is how our voucher looks like. So you can see, our deferred revenue and deferred COGS are getting posted. And in this specific case, we had certain miscellaneous charges as well. So that kind of automatically get considered in the system. Here is my revenue recognition schedule. So now the order is invoiced, and you can see that we still have all the dates and whatever we saw in the expected revenue recognition schedule. Everything is now here as well. And you can see this is one-time occurrence of $116 for this, and for others it's the $48. And Yogesh mentioned earlier that it will do round off in the last month. So when system is dividing and it's figuring out, okay, there is a cent that's left, that's being pushed at the last revenue schedule. So in this case, it takes into consideration the rounding as well, so that the deferred revenue exactly matches what you are posting in the system. From a recognition perspective, it's exactly the same as we did for deferred revenue. So for those who wants to try out the revenue recognition schedule and get started, the preference would be that you started with the deferred revenue processing and take it all the way to the end, because that's the basis for anything or any other scenario that you might see. So that's why we kind of pulled it first in the presentation, and later on now we are getting into more complexity, revenue allocation and whatnot, but the steps more or less now are the same. So in this case, we recognize the revenue, and once we recognize it, system will just go through it and will create the vouchers and revenue recognition journal based on whatever we have specified. Here, you can see, given that we have completed our installation and there is a date that we have specified for completion of that installation, we are recognizing the revenue from that perspective. That's item SP030. And then the other item was managed services. And we have also recognized the revenue and posted it to the COGS as well. Next is the revenue recognized revenue schedule. So here you can see, earlier as I mentioned, if it's a single voucher that's getting posted, that voucher number is right here. So a lot of work has gone from a system perspective to display these vouchers right on the form wherever needed. And for others, it's just the asterisk that's there. So now there may be scenarios wherein a new contract is getting added. So in this case, we are adding consulting services again, and in this case, the unit price is $1,500, and it's for 12 months. Now there are scenarios wherein this should have been on the original contract as well, but for reason XYZ, it was not. But from a revenue recognition perspective, what we want to do is we want to reallocate the prices. So we have already allocated and posted the deferred processing and whatnot on the original order. Now this is a new contract, but now we want to take both the orders in combination and make sure that we are recognizing the revenue on the basis of fair market value. So here, what we have is on the new order, you will see the option is recalculate price with new order lines. So we click on that, and what that does is it gives you an option on select the orders. So in this case, we are selecting the previous order, which is already invoiced. So order number 217, and now system automatically assigns a revenue schedule ID. So now you have two orders for which you want to do the rescheduling. When you select these two, first of all, on this specific screen, you can see what you have already posted. So, for installation, we already posted 116. For managed services, it's $583. For the new line item that we are adding on this, which is consulting services, there is no schedule, there is no amount that we have posted so far because the order is still open order. Now here, we can click on update reallocation. And once that's done, then we will get a different view of the same allocation. So now you can see, everything is same on this side. The difference is the reallocated amount, because now instead of 2 line items on the original order, the system is considering 3 line items across multiple orders. And this is not limited to just 2 orders. It can be across multiple orders as well. So it's just a matter of how many orders you want to select. Once you select it, you update the reallocation, verify the value. The logic from a system perspective is exactly the same. So it still look at whatever the revenue price is and figure out the percentages across all these items, and that's when the reallocate amount is coming up. Now, before we do anything, we can also look at expected voucher. So we don't have to process it and then look at what exactly is remaining. So we can just click on expected voucher, and it will show us what are the net changes that will happen. So in this case, system is telling us these are the things that we need to reverse, and that's why you see this reverse transaction checkbox getting marked. And these are the new values that will get posted. From a system perspective, it takes care of all the reversals and journal entries. You just need to make sure that your amounts, etc., are correct, so that you don't have to go through the complex process in some cases of either reallocating the revenues or revising your credit notes. So it kind of puts a little bit more onus on the customer service or whoever is entering the original order to make sure those orders are keyed in correctly for the first time, because now there is a process that runs even behind the scenes after the invoicing has been processed. Post reallocation. So we saw the revenue allocation, the expected revenue price allocation. Post allocation is just a simple process. You click on it, you specify on what date you want to process it, and once that's done, you basically system automatically kind of take care into consideration whatever you saw and post the revenue price allocation. So now we are looking at revenue price allocation. And if you look at this screen, this does not even tell you that it's across multiple orders and whatnot. When we look at revenue price allocation, it just looks as if it was a single order. It takes into consideration the prices, and these are the revenue recognition prices that we earlier saw. And you can also see there's a field that has been added. What that means is that something has happened and you have reallocated your prices with other orders. So that's why the separated field is there. So at least you are informed. Revenue adjustments. So there may be scenario, wherein the orders are different, and then you need to look at your revenue adjustments. So when you are on the sales order, you can look at invoice, and then you can click on revenue adjustments. So here, system automatically posted, given that we have done all the reversals and reallocation, so system automatically posted the revenue adjustments. So this is a journal batch number that has been created, and this is the journal name that we created, and it has already been posted. And now we can look at all the entries that have been posted. Here you can see reversal for internal accounting. So there is nothing that's changing from a customer perspective. It's more of internal changes. Now there are parameters with the help of which we can control whether we want changes like this to be visible to customers or not visible to customers. If you don't want to make it visible, from an invoicing perspective, there are no changes. But if you do, then what you will see is, you in the customer transactions, you will see the invoice number 1 and invoice number 2. So don't get surprised if you start seeing dashes, depending upon, if some functionality is turned on. It's what system is just showing is, so originally the invoice 758 was posted, and later on when we reversed it, you can see transaction type is revenue adjustments. It automatically created invoice 1 and 2. The original invoice was settled with -1, and -2 is what is still open. But you only get these transactions or new invoices only when the functionality is turned on. From our perspective, we don't see a lot of customers turning this on because it will create confusion and issues when customer starts to see, why are you sending us the same invoices with multiple dashes when it's exactly the same amount and whatnot. The other issue, if you turn on this functionality, is when you print out the customer statement, you will see the new internal accounting adjustments getting posted as well. So, and if we don't want our customers to get confused by looking at their customer account statements, we suggest that you turn this functionality off. With that, so that's what we plan on covering, and I also wanted to provide some helpful links. So we have this is the standard docs page article that kind of talks about the revenue recognition, and then we have also provided I've written a series on revenue recognition, detailing how to enable it and where you go. So all the detailed steps are written. So feel free to take a look at these articles, and if you have any questions, you guys can reach out to us. With that, we can open it for Q&A if there are any. And we have also provided the information. So if you have any questions, you guys can reach out to either myself or Yogesh as well.
Thanks again, Yogesh and Satish. So there is, obviously, we've only got a few minutes. So I think we can maybe answer a couple of questions. Manas's question is, how does it relate to parameters in item model group post deferred revenue account on sales delivery? Does that make sense, everyone?
I think though that parameter probably wouldn't impact. So there are a lot of features and functionalities that kind of existed even before the revenue recognition came out. And it was more about just posting it to GL accounts. But this revenue recognition is a different aspect altogether. We don't think there is any linkage between the two. But you are more than welcome to give it a try and see if there are any differences based on when the parameter is turned on and turned off.
Yeah, great. Now, there are some questions around both Magdi and Omar and some others have asked the same question, which is, how can I use revenue recognition if I'm using journals, item journals, hour and expense journals, not sales orders? So that's what they're asking. How can they use revenue recognition for those scenarios? Yeah.
That feature or functionality has not been released. So the only way for us to use revenue recognition functionality is if you are using sales orders, because there is a lot more that kind of goes in. There are dates, there are contractual obligations, and it's not just for journals. Journals are a new journal type is just used to process the revenue recognition, but the functionality on its own does not exist just for journals, at least at this point.
Yeah, and just to add to both the answers, so on this one, there are a lot of other scenarios we face in field that still needs to be looked at, and I'm sure Microsoft has those on their horizon, like a lot of customers where they have contracts, and then during the contract, so same contract gets renewed, and kind of a product is sold, and then every year there is a renewal for the product, and then during the year somebody adds another product to the same contract, which goes till end of the same contract's life, and so on. So there are different scenarios which are out there, which definitely are not yet supported. Also from CPQ kind of integration from that perspective. The other side is the previous question was about deferred revenue on item model group. It's more relevant if you look at the example we talked about earlier. It's more relevant for that hardware component of the product. So it's relevant when, say, you have the hardware product that gets delivered to the customer, let's say today, which is almost end of the month. But for whatever reason, we don't invoice that sales order until next month because we want to invoice once whole order is fulfilled. Say, let's say our policy is to invoice only after order is completely completed, while partially it is delivered. Now that component, that checkbox on model group allows you to recognize the revenue today, even though we haven't posted the invoice. It will help you recognize the revenue just from that standpoint.
That's really excellent. So again, thank you, Yogesh and Satish, for sharing expertise. I'm sure it's settled a lot of uncertainties in people's minds when it comes to this matter. Obviously, we've exceeded the time once again. I want to thank Satish as well as Yogesh for delivering many sessions today. So thank you for taking your time out today.